Hello, friends. If you are 65 or older and you own the home you live in, there are 5 legal reasons you may be able to stop paying part or all of your property tax right now. Not loopholes, programs already on the books. In one state alone, the property tax credit ceiling is $8,000 a year. Over 10 years, that is $80,000. And according to AARP, more than 9 million Americans likely qualify for property tax relief, and only about 8% apply. Not because the programs do not exist, because none of it is automatic and nobody told them the forms were there. I am going through all 5 today, and the last one sounds too good to be true until you read the county rule for yourself. Hello, friends. What I just laid out is not 5 versions of the same program. These are 5 completely different legal mechanisms, and they work differently, they apply differently, and they help different people. Some cut the bill before the rate is even applied. Some freeze it so it stops climbing. Some let you stop paying out of pocket right now. Some send money back after the fact. And at least one, in the right county, can erase an entire levy line from your bill. Grab a pen. Mark the ones that apply to your situation. I am telling you right now, at least one of these is yours. The rules around property tax relief shift every year. Income thresholds change. Filing windows open and close. County programs get adopted or expanded, and the assessor's office does not send you a letter when it happens. The people subscribed here find out while the window is still open. Subscribe now, and let's get into it. Before we go further, I need to address something, because people hear a topic like property tax relief and immediately sort themselves into one of 2 camps. The first camp is the comfortable retiree. Some savings, a paid-off home, and you figure this kind of thing is designed for people in worse shape than you. The second camp is the fixed-income homeowner. You are counting every dollar, and you have learned to assume the good programs are always for someone else. Both of those assumptions are wrong about at least one item I am covering today. And on every single one, I will tell you exactly which group it helps most and how. Some of these will surprise the comfortable group. Some will surprise the fixed income group. And if you stay with me, the last one is the one that sounds the most exaggerated until you see the county rule in writing. And in the right county, it is the closest thing to being legally exempt from a local property tax levy that exists. Now let's get into them. Number 1, the big senior homestead exemptions that are sitting there unclaimed. Here is the misconception. Most homeowners over 65 assume that if a meaningful senior exemption existed, the county would have already applied it. That assumption is costing people real money because in most places, the exemption does not start until you file the form. Nobody enrolls you. The bill keeps arriving at full price until you act. Here is what these exemptions actually do. They reduce the taxable value of your home before the tax rate is even applied. Think of it this way. The tax office agrees to pretend that part of your home's value does not exist for tax purposes. In Texas, the mandatory school district residence homestead exemption is $140,000. If you are 65 or older, you get an additional $60,000 on top of that for school taxes. That is a combined $200,000 of school tax value that is removed from your bill before the rate touches it. Your exact dollar savings depend on your local school tax rate, but the value shield is $200,000. That is not a discount. That is an entire layer of value the tax office agrees to ignore. In New York, the senior citizens exemption can reduce the taxable assessment by up to 50%, filed on Form RP 467 with your local assessor. The local standard income ceiling can be set up to $50,000, with an optional sliding scale up to $58,400 where adopted. The deadline in most New York communities is March 1st. In Illinois, the senior citizens homestead exemption reduces your equalized assessed value by up to $8,000 in Cook County and contiguous counties, or $5,000 elsewhere. Now, who does this help most? Both groups. The comfortable homeowner is often stunned that the biggest Texas senior break is not framed like means-tested assistance. It is age-based. And the fixed income homeowner benefits anywhere these broad senior exemptions exist, because the assessed value reduction lowers the bill for everyone who files. Here is what to do. Contact your local appraisal district or local assessor's office. In Texas, you are filing Form 50-114. In New York, Form RP-467 with the local assessor, not the state. In Illinois, county filing is usually PTAX-324 or annual PTAX-329, depending on county practice. Use these words. I am 65 or older, this is my primary residence, and I want the senior homestead exemption forms for my county. That is number one. That is the obvious kind of relief. The next one is quieter, and for some homeowners, it is more valuable because it stops the damage from compounding. Number two, the freeze and reimbursement programs that stop your bill from climbing. Here is what most people believe. Once the assessment goes up, you just live with it. The county says the home is worth more, and that is that. But there are programs in multiple states that either freeze your assessed value at a base year or reimburse you for the increase. Your house can triple in value on paper. The bill cannot go up. In Illinois, the Low-Income Senior Citizens Assessment Freeze Homestead Exemption keeps your home's equalized assessed value at the base year level. For taxable year 2026, payable in 2027, the household income limit is $75,000. For 2027, it rises to $77,000. For 2028 and after, $79,000. You file PTAX 340 each year through your chief county assessment office. And here's the part that surprises people. $75,000 is not a poverty level threshold. This is the item where the comfortable retiree usually tunes out, and you should not. In New Jersey, the Senior Freeze Program reimburses eligible seniors for property tax increases on the principal residence from the base year through the application year. Here is what that looks like in practice. Someone I heard from in the comments on a prior video asked whether this still existed in New Jersey. His name was Frank, 68, retired electrician, Camden County. His base year property tax was $4,200. The current bill had climbed to $5,700. He had mentally accepted that increase as permanent. He filed the combined PAS-1 application so the state could determine senior freeze eligibility. The reimbursement? $1,500. That is $125 a month he had been absorbing for no reason. The New Jersey PAS-1 combined application for the 2025 application year is due November 2, 2026. The division encourages filing if 2025 income was under $500,000 and then determines which relief programs apply. Here is what to do. Ask your chief county assessment office or your state's property tax relief portal 2 questions. Do I qualify for the senior assessment freeze or reimbursement program? And what is my base year? That is number 2. But lowering the bill is not the only way out. Sometimes the most important move is not a reduction at all. It is changing when the money has to leave your hands. Now, everything I have covered so far has been about shrinking the number on the bill. This next category matters even if you cannot shrink it at all, because it can legally stop you from paying that bill out of pocket right now. Number 3, the deferral programs that let you stop paying out of pocket today. Here is the misconception. If you still owe the full tax, there is nothing else to talk about. That is wrong. Property tax deferral means the state or county pays your tax bill now and takes repayment later, usually when the home is sold or the owner passes away. The tax is not forgiven, it is moved. And for a homeowner on a fixed income who cannot absorb that bill this year, the timing is everything. In Oregon, if approved, the state pays county property taxes on November 15th on the homeowner's behalf. The regular filing window runs January 1st to April 15th. Late filing is allowed April 16th to December 1st with a fee. The deferral creates a lien on the home at 6% interest annually. I will say that again. Deferral is a lien, not forgiveness. A woman I heard from in Oregon described it this way. Her name was Eleanor, 74, retired school secretary, Eugene. She was staring at a $4,800 annual property tax bill and assumed there was nothing to do except pay it or fall behind. She filed Oregon's senior property tax deferral through the county assessor by the regular deadline. That $4,800 bill is $400 every month. Deferral did not erase it, but it stopped that $400 a month cash drain right now, with the amount secured by a lien and repaid later. In Illinois, deferral is available to persons 65 or older who meet income and other qualifications. The state pays the taxes, files a lien, and repayment is due within 1 year of death or 90 days after the property stops qualifying. In Washington, the statewide limited income deferral is available to homeowners with combined disposable income of $57,000 or less. In King County specifically, deferral is available if you are 60 or older or retired due to disability, with 2025 household income of $88,998 or less. In Massachusetts, Clause 41A, deferral requires Form 97-1 the first year, filed on or before April 1st, or 3 months after actual tax bills are mailed, if later. In Colorado, Jefferson County applications run January 1st to April 1st, and county treasurers resume program administration beginning in 2026. Who does this help most? The fixed-income homeowner. This is the person who cannot absorb the bill right now and needs cash flow relief, even though the tax still exists later. Here is what to do. Contact your county assessor, treasurer, or local board of assessors depending on your state, and say this. I want to know whether I can defer my property taxes as a senior homeowner, what lien it creates, and what the repayment trigger is. Oregon deadline, April 15th regular filing. Colorado Jefferson County, April 1st. Massachusetts, April 1st or 3 months after actual bills. King County helplines, 206-29639, 20 for exemptions, 206-2967-300 for deferrals. Jefferson County Deferral Help, 303-271-8336. That is number 3. Now we move from postponing the bill to getting money back, because the state decided the burden itself was too heavy for your income. Number 4. The refund and circuit breaker money people never claim. Here is what most people believe about property tax. Property tax is what it is. You pay it or you do not. There is no refund side to this. That is wrong. Multiple states run what are called circuit breaker credits or homestead credits. The plain English translation: if the property tax burden is too large relative to your household income, the state sends some of it back. These are not discounts on next year's bill. These are checks or direct credits that come back to you. And the numbers are not small. In Vermont, the 2026 property tax credit filed on Form HS-122 with Schedule HI-144 has a maximum credit of $8,000. The household income ceiling is $115,400. The regular deadline is April 15, 2026, and it is generally not accepted after October 15, 2026. Let me slow down on that number. $8,000 a year. That is roughly $667 a month. Over 10 years, that is $80,000. That is the headline figure, and it is sitting in a state form most qualifying homeowners have never filed. In Maryland, the homeowner's property tax credit kicks in when property taxes exceed a fixed percentage of gross income. If filed and qualified by April 15th, the credit can appear on the July bill. Later filing is allowed through October 1st with a revised bill. In Michigan, the homestead property tax credit disqualifies total household resources over $71,500 or taxable value over $165,400. The maximum credit is $1,900 for most claimants. Filed on Form MI-1040CR, the timely deadline is April 15, 2026, and here is a detail people miss. The claim window for the 2025 credit stays open until April 15, 2030. If you missed it last year, you can still go back. In Minnesota, the property tax refund is due August 15th and can be filed up to 1 year late. Minnesota also has a special refund with no income limit, a maximum of $1,000, available if your homestead tax increased by more than 12%, and at least $100 from 2025 to 2026. The 2025 homestead credit refund increased nearly 15%. Filed on Form M1PR. Minnesota Revenue Phone Support, 651-296-3781 or 800-652-9094. In Massachusetts, the Senior Circuit Breaker credit for tax year 2025 caps at $2,820. Income ceilings are $75,000 single, $94,000 head of household, $112,000 married filing jointly. Filed on Schedule CB. Who does this help most? The fixed income homeowner. These programs are the most explicitly built around the relationship between your tax burden and your income. But the income ceilings are higher than most people assume. Vermont's ceiling is $115,400. Michigan goes up to $71,500. These are not programs reserved for the lowest incomes only. Here is what to do. File the state property tax credit or refund claim through your state revenue or tax department. Use these words. I need the homeowner property tax credit or circuit breaker form for this tax year, not the renter form. Deadlines to know. Vermont, April 15th. Maryland, April 15th for the July bill and later through October 1st. Minnesota, August 15th. None of this happens automatically. Your state does not review your tax burden and decide to send you a check. You file, or the money stays where it is. That is number 4. And even that is not the end of it. The last category is the one people dismiss as too good to be true until they see the county rule in writing. Number 5. The county and city senior exemptions that can erase an entire levy line. This is the item I told you to stay for. This is the one that comes closest to the title's promise, because in the right jurisdiction, it can wipe out a whole local ad valorem layer. That is not a reduction. That is a line on your tax bill disappearing. Here is the misconception. If total exemption existed, everybody would know about it. But these are local option programs, meaning the county or city has to adopt them. And the ones that have adopted them are not advertising it on the evening news. In Florida, a local option senior exemption can be equal to the assessed value of the property for qualifying long-term residents age 65 or older, with a just value under $250,000, permanent residents for at least 25 years, and household income under the limit. The 2026 household income limit for that exemption is $38,686. Let me be precise about what this does and does not do. This exemption applies to the levying authority that adopted it. It does not automatically erase every line on the bill. If the county adopted the program, it applies to the county levy. It does not automatically wipe out the school levy or every other taxing unit. But in the counties and cities that adopted it, this can erase an entire local ad valorem layer. That is not a discount. That is a levy line disappearing. In Miami-Dade, you file Form DR 501 plus DR 501 SC, the Household Income Sworn Statement. Supporting application and income documents are due March 1st. In King County, Washington, for 2025 earnings, annual income must be under $84,000. The county states directly that with exemptions, you pay less taxes or none at all. That is county program language, not a blanket statewide promise. But none at all is their wording, not mine. Who does this help most? Both groups, with strict local eligibility. The fixed income senior needs the relief most, but the comfortable homeowner is the one most likely never to have checked whether their county or city even adopted the program in the first place. Here is what to do. Call your county property appraiser or county assessor and ask specifically, what senior property tax relief programs do you have for homeowners over 65, and which of them can reduce a county or city levy to zero or close to zero? Miami-Dade deadline, March 1st. King County Exemption Helpline, 2062-963-920. And while you are on that call, use this script. Say, I'm over 65, this is my homestead, and I want every senior property tax relief program you administer. Exemptions, freezes, deferrals, and refunds. Which forms do I need? What is the deadline? And which of those programs have no income limit? 1 phone call, 4 questions. That is it. That is number 5. So, here is the full picture. The big assessed value exemptions that cut the bill before the rate is even applied. File the senior homestead form with your local appraisal district or assessor. The freeze and reimbursement programs that stop rising assessments from hitting you forever. Ask for your base year and file the freeze or reimbursement application. The deferrals that can stop the out-of-pocket payment now and push repayment to later. Request the deferral packet and ask what lien it creates. The circuit breaker credits and refund forms that send money back because the burden was too high for your income. File the state property tax credit form, and the county-level senior exemptions that can erase a local levy line entirely. Ask your property appraiser which programs your county adopted and whether any of them can reduce your levy to zero. 5 mechanisms, 5 different kinds of relief, and not one of them starts on its own. The county does not file the senior homestead form for you. The state does not freeze your bill because you turn 65. The tax office does not offer you a deferral just because cash is tight. The refund does not arrive because the burden feels unfair. The local exemption does not apply itself because you have lived there for 25 years. Being legally entitled to relief and actually receiving it are 2 different things. The gap between them is information. More than 9 million Americans likely qualify for property tax relief, and only about 8% apply. That means the odds are very high that someone you know, someone you care about, is paying a bill right now that is legally larger than it needs to be, simply because nobody told them the form existed. Picture one person, a parent, a neighbor, a widow on your street, or a friend from church who is over 65 and owns their home. Not because they are struggling, because the odds are high they are paying at least one of these right now, simply because nobody told them the form existed. Send them this video. That is how this information moves. Subscribe. Share this with someone you know who owns their home and is over 65, and I'll see you in the next one.